So you're thinking of buying a home in the Salida, Colorado area? Well, in this video, we're going to be talking about how to buy a home the right way in Colorado. And you're gonna wanna stick around to the end because we offer an insight you might not have considered. If this is your first time to the channel, welcome. This channel is all about living in the Salida, Colorado area and the real estate market here. So be sure and subscribe and hit the bell for notifications so you're the first to know when new informative videos become available. I'm McCarthy, a realtor that specializes in Salida, Colorado and surrounding areas. And I get calls all the time from people just like you who are looking to move here. So whether you're thinking of moving here in a few weeks or a few months, be sure and reach out to me. All of my contact information is below, and I'd be happy to help you make a smooth transition to the Salida, Colorado area. Now, first, let me introduce to you my preferred lender, Jess Fisher. He's here with me today to chat with you more about the buying homes in Salida, Colorado and Colorado. And he specializes in all of Colorado, and all of his contact information is below if you want to reach out to him directly as well. We are talking about how to buy a home in Colorado the right way. And so really we're going to map out the whole transaction process for you from beginning when you first start looking to the end, and offer a lot of really helpful tips along the way, both from the real estate side and from the lending side. So first, when we're starting out, most people start by, choosing whatever your preferred site is, whether it's Zillow or Realtor.com, and just looking at homes. Some people just do that passively when they're going to bed, right?
I still do.
Yeah, exactly. There's always that perfect home that you're looking for. So if you're at all in that place, that's kind of listen up. But if you are thinking you're going to buy, I don't know, in the next year or more, it's not too early to align yourself with helpful people that can help you with that process and make sure you are in a good position so that perfect home does become available, that you can actually pull the trigger, right?
Yeah.
So one of the things we like to talk about a lot, if you watched the video about 7 mortgage mistakes that we recently posted, we talk a lot about this, but to reiterate, what's the first thing that somebody should do?
First thing that somebody should do is get pre-approved.
Absolutely. So what does that mean? Just give us an overview.
Yeah, so pre-approval looks at kind of the macro side of lending, debt to income ratio, credit score, that type of thing. Usually needs some verification with documents as well too. So some documentation in there just to kind of verify everything so they can really understand debt to income as it relates to credit score. Those are probably the big ones, along with the down payment, as far as, how much home does somebody qualify for?
Absolutely.
And then also in concert with that, also them starting a relationship with a realtor.
Absolutely. Really, yeah. So he teed me up there. I was going to mention that as well. So definitely especially if you know an area that you're looking in and you think you might want to look at homes there soon, it makes sense to align yourself with a realtor that works for you before you find that home. And the way it's been for many, many years is a lot of people find the home first. They reach out to whatever random person and they say, hey, I want to look at this home. And while you can do that, now there are changes in the real estate industry. There was a lawsuit that passed this past year. I actually have a video where I go into more detail about that. But ultimately, one of the outcomes is you need to have a formalized business relationship with a realtor before they can show you a home. The way this is better for you as a buyer is to do your research on realtors before you find that home, because you don't want to scramble and just work with just anybody. It makes sense to work with somebody that you're comfortable with, have an opportunity to speak with them so they can learn about your situation and they understand your needs so they can be your advocate when you decide to look at that home and perhaps buy it. So research realtors with homes early on in the process, right?
Yeah, it's so important too, because realtors will also be keeping an eye out.
Absolutely.
So then you have multiple eyes, and you have, let's say you're out of state, or you're moving somewhere that you're not local to. Mm-hmm. You've got a pair of eyes on the ground, and you could speak more to this, but there's also homes that come up that may not hit Zillow.
Totally.
Right? And so if the right opportunity comes through with the realtor networks, just having that one realtor kind of on the inside, can possibly find some really great
Absolutely. I actually just signed on with some sellers today. Their house isn't going on the market for a few weeks, but we have that dialed in, and I'm ready to start talking to my clients about this house. So you can get some good insider information if you're working with somebody who already understands your needs and can start looking for you. That's a really good point. So get aligned with a mortgage broker who can get you that pre-approval letter, and get aligned with a realtor who understands your needs. And so that's the first step in the process. Okay, so fast forward, you find that home, you have that realtor that is there for you to write an offer on a home. So again, back to the pre-approval letter. If you didn't get it already, you absolutely have to have it now. I know I will not write an offer unless my clients have a pre-approval letter. And one thing that we didn't elaborate on in this video yet is just the importance of knowing that you're qualified to buy that house. So, like you said, you're verifying income, but you're also verifying that you can afford it. And so you're not writing an offer on a house that you'll later discover you can't afford. Yeah. And you're not changing your expectations when, you're looking at homes that perhaps you can't afford, or you're buying a house that maybe you are qualified for, but ends up being a monthly budget that doesn't work for you.
Yeah, it's so important. There's one approach of, let's just throw it against the wall and see if it sticks, right?
Yeah.
and that is an approach, and some people do that. But as a buyer buying my own home, I don't want to get emotionally attached to the home, start creating expectations, envisioning what's going to go where in the home, and all these things, and not know that it's actually something that I can afford, and that's going to fit my monthly budget.
Totally.
And that pre-approval process not only kind of helps cage expectations as far as how much home one can afford, but also it puts the loan originator or broker and the realtor in alignment with what's possible for that borrower. And so right out of the gates, instead of just the borrower or buyer doing all the work and trying to pushing the initiative, you have two other people that's helping you to be able to make these things become a reality.
Absolutely.
So that's really, it's getting out in front of any potential issues, getting out in front of any expectations, all that kind of stuff up front, and it makes for such a smoother transaction.
Absolutely. Yeah, or even just to get the house in general. Yep. So, I know we work a lot together, and when I'm writing an offer, we make sure we have a pre-approval letter for the amount of the offer, and you're not signaling, if you're wanting to negotiate, that you're qualified for $100,000 over what you're offering, because that can signal to the seller that they can counter back to you. So so just working with a realtor and a lender that understand your situation and can act quickly, get you a customized letter for the specific house you're writing the offer on, and you've already had that pre-approval in general, and then they just make it specific to the house that you're writing the offer on.
Yeah. So, and I think you hit on something there. I just wanted to kind of elaborate a little bit, is quickly.
Yeah.
So
quickly.
We do see in Colorado homes, potentially move pretty fast. If it's a well-priced home in its range and it really, checks a lot of boxes, they can move pretty quickly.
Absolutely.
I mean, we see people that, want to think about it for a weekend or think about it for a week, and then there's already offers on the table. And so now they're, having to be second or third in line. That makes it tough. But when you have a realtor and a loan officer already working with you, you can, move quickly on that and make things happen.
Absolutely. Yeah. So going back to doing your homework and getting those people on aligned with you from the beginning, then they can work on your behalf when it best suits you. So that matters a lot. So you've written the offer, you have the pre-approval letter, say your offer gets accepted, or there might be some negotiation back and forth with a counter offer. And so your realtor will be able to go through all of that with you. And then you come to an agreement. You are officially under contract. When both sides sign that offer, you're now under contract. And so the next step is one of the things you're doing. This is the first few weeks are kind of the busiest, but you are initiating your loan. So if you haven't filled out the application yet, which you should have, but if you haven't, you're filling out that loan application and starting the loan process. So talk a little bit more about what that looks like from the buyer's perspective.
Yeah. So starting the loan process, if if the loan application hasn't been filled out, that absolutely has to get done. And then essentially what happens once you go under contract is locking in the rate. That's probably the most important. And that's where you're talking with the loan officer to lock in the rate, whatever your interest rate is going to be for that house.
Okay.
And that's based on the rates as they are offered at the time. Rates can fluctuate 1, 2, 3 times a day. Wow. When it's really crazy and there's a lot of market swings, I mean, we can see 5, 6, 7 times. So really locking in that rate, so you know that that's going to be the rate, when you close and for the time that you own the house, unless you refinance.
Okay.
One thing people need to know is when you lock in the rate, it's kind of like buying a stock. Okay. We all would have wanted to buy Tesla at $5, but sure. That's no longer offered. It is what it is today. So locking in that rate, you always have the ability to refinance later, but you can't really change the rate through the process.
Okay.
So even if rates improve, generally speaking, 9 out of 10 times, the rate that you have is what you're going to have, and you'll have to look to refinance, down the line if that's something that's, desirable.
And are you coach your clients on that process, right? Because that can probably feel overwhelming to know how do you know it's the right time?
Yeah, that's a great question. And I get that quite a bit. How do you know when it's the right time? A lot of what people focus on is the rate, but that's actually kind of a smaller portion. It's really how the loan is structured.
Oh, okay.
Because depending on how people feel, you may be able to refinance down the road. And I mean by how they feel of, is the market going to get better or is it going to get worse?
Okay.
But ultimately, waiting around for something better when what's in front of you works sometimes can backfire. And
Gotcha.
I've seen people wait, and they wait too long, the rate goes up, and they actually can't afford the house anymore.
Gotcha.
So if you can afford it, it fits within the monthly budget that's been set or, agreed upon by the family or whoever's, doing the buying and borrowing, then just go ahead and lock the rate.
And not worry about those tiny little shifts.
Yeah,
okay.
It's not worth it because it can go against you as well.
Gotcha.
Too.
So you're able to coach people in understanding all
and if there is a big market event that's coming up and there is enough time, sometimes I will say it's worth waiting.
Gotcha.
But generally speaking, if it fits within the budget, go ahead and lock the rate because you don't want it to run away from you.
Gotcha. Okay, so that's kind of within the first. How long in the process do you do that?
Once you go under contract, I basically will give them a call that day as soon as I receive the contract. And I'm looking to lock the rate within a day or two.
Okay.
Typically, the purpose for that is just to get the ball rolling and get things moving. Because once the loan application comes in, I have all the documents I need. We've locked the rate. I submit it to whatever lender I'm going to be using. And then that can start the underwriting process.
Gotcha. Okay. Yeah. And so the underwriting process, so that's associated with the lender. They're going to review everything. Mm-hmm. And then from the buyer's perspective, what kind of expectations do they need to have with that?
Yeah, great question. So from a buyer's perspective, it's kind of a flurry of documents to start out with. Updating, maybe you were looking for a home and I've got stuff that's 6 months old or 3 months old as far as pay stubs, stuff like that. I'm going to refresh those documents just to confirm, submit everything to underwriting. A lot of people don't know, but most underwriters have about 48 hours to review documents.
Okay.
Then they send a request to me or to my processors. We reach out to the borrower provides those documents, and then we give them back to the underwriter. The underwriter has 48 hours every time they receive a new document.
Wow. Okay.
So the big thing is through that process, it's kind of boom and bust. Hey, we need all these things, and then it's quiet for a while.
Gotcha.
Typically, if everybody's doing what they're supposed to be doing, the quiet part means everything's running smoothly and there's a bunch of things that happen in the background that I do and the underwriters do and everything to kind of make this loan come together. So we're doing that stuff.
Gotcha.
But the biggest thing that slows loans down is delays in getting documents.
Okay.
So my general rule is if I get a request from an underwriter, I send that request to the borrower within the same day or no longer than 24 hours.
Yeah.
If the borrower turns it around in the same day or 24 hours, the loan can kind of move through the process. And there's little wrinkles through the process or little bumps through the process that can kind of cause little hitches in how smooth it is. So the sooner a borrower can kind of get those documents and we can move through that process, the sooner everybody knows that there's no issues, right? Because the underwriting process is not only looking at, let's say for a conventional loan, looking at like Fannie Freddie guidelines, but also lenders have overlays of those guidelines as well too. So are we meeting all the standards all along the way? So the quicker we can get through the underwriting process, quicker we can get to closing.
Absolutely. So the big takeaway, when your lender tells you that they need something, get it to them right away.
Yeah.
And don't create the delay.
Yeah.
Don't be the logjam in your own loan, because that could affect your closing date and a flurry of other things, right?
Yeah. And just for example, condos are a little different. There's a little bit more work to them.
Okay.
But I did, a friend of mine was doing a loan with me, and I said, hey, let's see how fast we can do this process, because I'm really curious about it. And it was an investment property on a condo. Okay. So some more layers in there than just a primary home conventional loan type deal.
Okay.
And we turned everything around same day to each other, and we were able to close the loan in 11 days.
Okay.
So,
wow.
Yeah.
So it can be done.
It can be done. And that wasn't a cash offer. I mean, that was just, just meeting the minimum to be able to get the investment property, and we closed in 11 days.
That's pretty,
because
pretty
we
slick.
just shrunk those turnaround times.
Yeah. Not everybody can do that, but still.
No, but it's just a highlight.
Yeah. Like it can actually be done if everybody's on top of it. So for the buyer, be on top of it is the big takeaway there. Yeah. So that's the beginning part of the loan process. So from a transaction perspective, one thing that needs to happen really quickly as soon as you go under contract is depositing earnest money. And so that amount you'll know ahead of time. It's written in the offer. It's usually about 1% of the purchase price. And so that is liquid cash that you'll need to submit to the title company, and they'll hold it in an escrow account. And that is kind of your skin in the game from the beginning of the transaction. And you will get that credited back to you at closing. But if you drop out of the transaction in an incorrect way, that's kind of the money that you have on the line. So one of the realtor's jobs is to protect that money for you, making sure that you adhere to all of the deadlines along the way. So in summary, there are multiple deadlines associated with the contract, and I'll highlight just a few here. There are many more, but one of the big ones is the inspection period. And so you have a period of time that's negotiated that I like to write in about 14 days or so, depending on the house, depending on the transaction. If it's a quick deal, maybe you do it sooner, but you want to have an adequate amount of time to do your full due diligence on the house. And we talk about inspections specifically a little bit more in the video we did about the 7 mistakes, which we referenced as well. But essentially, there are multiple inspections that you can do on a home in addition to the general inspection. And you want to make sure you do those just to assess the home, and do them within the time frame that you have written out in the contract, because that's your time to back out of the deal if something comes up, or negotiate if something comes up that you want to have fixed. Do you have anything to add to that?
I think it's really important on the inspection side from a contract and timing perspective is getting on that as soon as possible.
Yeah.
That way, like you said, if there are issues, and maybe some of them are minor and it may work out into your favor, but if you do it early enough to have those negotiations from the seller side, to where the dates are kind of like dominoes. So if some dates need to get pushed, depending on what dates they are, it can just start pushing all the dates and start to lengthen out the process. And so being able to jump on it. Really
Absolutely. Yeah. So like I said, if you have 2 weeks, it doesn't mean you should have your inspection on day 12. Like you want to do that as soon as possible. And so that's with a general inspector. Perhaps you're doing radon, perhaps you're doing a well inspection or a sewer scope, depending on the home. So again, work with a realtor who understands the market and can recommend the types of inspections that might be useful for you. These are upfront costs that you're paying for. You won't get that money back if you back out of the deal, but it is money well spent, because you're about to purchase probably your most expensive investment. And spending a little money up front really helps you save in the long run. We've got that inspection period. Your realtor will walk you through, how you want to handle that. Do you want to back out completely? Did something come up that you don't want that house anymore? Or did something come up that you want to negotiate? So you have a period of time to submit what's called an inspection objection, and the realtor will be able to try to negotiate whatever it is came up. So say a big ticket item came up and you want a price reduction or you want concessions in lieu of repairs. So essentially the seller's paying you a certain amount of money at closing. So that's all negotiable. You go through the negotiations on that. And then if you come to a resolution, you have a document for that, you move forward. But we're communicating with the lender, particularly if there's a price reduction or concessions. And there's a certain amount of concessions you can have for the loan. So your realtor should be communicating with your lender if there's, an amount of money that you're asking for. You might not even be able to use all of it for your loan.
Sure.
So you want to make sure that your realtor understands how all of it works and is communicating with your lender if they have a question. There's a lot of back end stuff going on there. And then we're also, another next step would be ordering the appraisal. So talk about appraisals a little bit.
Yeah, appraisals are one of the things once you're under contract that can really affect the whole process, the contract itself. I mean, if the appraisal comes in below value, then got to negotiate that because the lender's only going to lend on the appraised value.
Yeah.
So, some loans can go above appraised value, but the vast majority is whatever the appraised value is. So if the purchase price is higher than the appraised value, then it's got to be negotiated, or a lender's not going to loan more money than what the house is valued at.
Yeah.
And to your point with the appraisal, lots of times I like to try and get the inspection done before the appraisal.
Okay.
Because the appraisal is an out-of-pocket cost as well too.
It is. Yeah.
And so if the appraisal happens before the inspection gets done and there's a deal breaker on the inspection, well, as the buyer, you've already paid for an inspection and now you've paid for an appraisal and you can't get that money back.
And that's actually another piece in the transaction where it matters that your lender and your realtor are communicating, because depending on the length of time in your contract, you can wait, and sometimes you don't have time to wait, and you have to just order the appraisal and hope that everything goes well with the inspection and you're not out in that money if you back out, just because of timing. So if you're in a situation where you can have an offer written on your behalf with the appropriate timelines, so you can do the inspection and still have time for the appraisal, that matters. And so we're in a market where, depending on what's going on, appraisals can take longer in the summer. We're in a small area where there are fewer appraisers that are available. And so it can take a few weeks to get an appraisal in some parts of the year, but not always. Yeah. And so being up to date on what that looks like and how much time you need, because that's a deadline that your realtor's writing into your offer. And if they're saying, a shortened amount of time, then that creates stress in the entire transaction.
Yeah. 5 days to 2 weeks, typically on the appraisal. Sometimes it happens a little bit faster, but 5 days to 2 weeks, which is quite a range.
That is a pretty big range.
And so kind of figuring out timing. But at the end of the day, if you have the right broker working with you and the right realtor working with you and everybody's talking, we're talking a lot about this, but at the end of the day, based on the timing and contract dates, everything gets smoothed out when you have the right person working.
Totally. You won't even notice that it's a thing. And then how much buyer, what's the range for an appraisal? This is another upfront cost, like you said.
Depending on, it varies quite a bit.
It does.
But depending on the location, but
very much so.
$850 to $1,050 in some areas.
Okay.
Other areas are more like $650 to $850.
Yeah.
It kind of just depends.
It does. Yeah. So to kind of, in terms of you budgeting for all of these upfront costs when you're under contract, it's a bit more than just your down payment that you're paying for. And so that's the appraisal process. So a little bit more about the appraisal. It is ordered through your lender and it's done by a third party. So that's something that, we can't control what comes up.
That's true. Yeah. It's a regulation. It's a rule.
Yes. That happened when there was a big issue.
So there's not like manipulating of price to be able to fit contract price, appraisal value with contract price, right? Yeah. They want separation in that. So it's the true value of the home.
Yeah.
And the appraisals aren't the same across all loan types.
Okay.
So a conventional loan is going to have they're going to be looking at different things or less scrutinizing than a government-backed loan like FHA, VA, USDA. Okay. They're going to be looking at kind of the same conventional stuff, but also for health and safety stuff, to even down to like peeling paint or rotted boards or weak boards in a deck, those kind of things. So depending on what home somebody's wanting to purchase, again, having the team already on board ahead of time. For instance, I have clients send me pictures all the time or listings, and they say, hey, they may be getting an FHA loan, and they say, hey, what do you think about this home? Or a VA loan. I'm a veteran and deal with a lot of veterans. And so I'll say, hey, it looks great, but would the seller be willing to have me and you show up at the house and scrape some paint off those windowsills and repaint them before the appraisal? So the appraisal, having the right people on board already kind of knows what the appraiser is looking for. And we can kind of jump on it and take care of it before the appraisal.
Gotcha.
So it's kind of like if an appraiser comes out and starts looking at the home and finds one thing that's wrong, there's a good chance they're going to be looking deeper for more things. So let's take care of all those things ahead of time before the appraisal. Now, if the appraiser does find stuff, it doesn't mean it necessarily kills the deal. It just will probably become a condition of closing. So it just needs to be handled before the deal
which
closes.
is another thing that can be negotiated. But ultimately, those types of loans tend to be stricter on conditions. So if you're looking at homes that have a really, big fixer-uppers and you want to do FHA, you definitely want to communicate with your lender to make sure that house is not going to be an issue. Or there's going to require a lot of extra tasks before you can actually close. And I wasn't planning on talking about it today, but one of the things that, for instance, I have access to is renovation loans as well too. Oh, okay.
So FHA, you can actually get the fixer-upper and get a loan to be able to to repair it as well too.
It sounds like you just have some solutions.
There's definitely solutions, but getting on board early is just the really important.
And communicating and finding out all of that. So that's the theme of all of this. So just real quickly for the transaction process, like I mentioned before, there are multiple deadlines that are going on besides just loan deadlines, like title commitment and HOA. And so your realtor will be able to guide you through that process, but those are just other pieces within the contract that you need to adhere by. Okay, another one is homeowners insurance, which we'll just briefly talk about here. It's something that you have to have as a condition of a loan. So there is a deadline that your realtor will put in that's a timeline for you to do your research and get homeowners insurance. There are some homes, particularly those in areas that are hard to insure. Maybe you're next to a forest, maybe you're in a flood area. Depending on what it is, it could be a higher premium. And so it's not just getting insurance, it's what's the cost of that, because the cost of that could be too much and it could actually make it to where it's hard for you to even get the loan. Right?
Yes. So generally speaking, we'll make an estimation of homeowners insurance when qualifying a borrower.
Okay.
Right. There's enough data out there to, kind of get a general sense, but that goes into debt to income qualifications. So it's calculated in the total. So you've got your mortgage, you got your homeowners insurance, you got property taxes, and then HOA if there is an HOA. All that gets calculated in debt to income. So going and getting homeowners insurance, once that's actually secured, basically I'll request the declarations page, which will say, hey, you're qualified, you're getting this insurance, these are the coverages, and this is the cost.
Okay.
And so then that cost goes into the calculation.
Gotcha.
So one of the things that we should mention real briefly is that on the lending process, there's assumptions made up front. There's assumptions on property tax. There's assumptions on homeowners insurance. So again, the quicker we can move through the process, getting the documents, meeting those deadline dates, all that kind of stuff, it kind of starts to complete the picture. Because some of those puzzle pieces that we're trying to make fit, they change as we go through the process. So having enough time to be able to make sure everything fits and is in alignment, debt to income, credit scores, HOA fees, property taxes, appraised value, all that kind of stuff matters, and getting all the way to the final step where you have the clear to close.
Totally. Yeah. So that leads us to, you've got the homeowners insurance, you've submitted all your documents, you go through underwriting, you get the clear to close. Now what happens?
Well, so you get the clear to close, but there is a final verification. A lot of people don't know that it gets underwritten.
Okay.
But then the underwriter's work gets reviewed by an underwriter.
Oh, okay.
So sometimes there can be, an additional document or maybe a letter of explanation because something's not clear.
Okay.
A letter of explanation and then they're also verifying again your employment.
Okay.
In that process. So they'll, give a phone call to the employer and say, hey, is this person still employed? Even though we did a verification of employment 30 days or 60 days ago or whatever it was, they're going to re-verify.
Okay.
But once you get the clear to close, then we're good. The lending process is done, and it's more focusing on balancing figures between the title company and the lender, making sure, all the zeros and numbers all match with that.
Yeah, and so what he means there's a title company that we're working with that creates this settlement sheet that they're balancing with the lender. And so you as the buyer would be getting an idea of what is your bottom line, what is the amount that you need to bring to closing. And so you'll kind of see all of the debts and credits and how it all works together and that final number that you should have an idea of, but that's the specific amount down to the cent of what you need to be giving, and often wiring the money or bringing a cashier's check and getting that money to the title company, and then they balance it. And that's how you purchase your home.
Yeah.
You're also going to be going to the title company to sign all of those documents, depending on the lender. There's a few. So, do your finger exercises or whatever it is. But there's some documents to sign. And as long as all of the money goes through, you become a new homeowner. And that's pretty much the primary process, right?
Yeah. And I would say, speaking of process, having the right team working for you makes all the stuff that we're talking about. No buyer needs to know all of it and trying to. It's the responsibility of like you and I to kind of walk through and say, hey, this is the next step. This is and to know that we need to start something sooner rather than later because of these future dates and all that kind of stuff. So it's having the right team with the borrower or buyer that really, I think, makes all the difference. It can make the transaction a lot smoother.
Totally.
Right? Just to have open lines of communication. Definitely as the borrower, never hesitate to reach out to your realtor or to your lender to any questions, just to keep the transaction smooth and know that everything's okay.
Yeah, and to keep and to let them know about, any changes, if you have changes in your employment or if you're doing anything like that. So just, open lines of communication, and the people that you hire are your advocates, and they're the ones that are protecting you throughout this whole process and helping make it smooth. So if you don't know about, if you buy a house and all of this stuff that we talked about doesn't become apparent to you, that means the people you're working with are doing their jobs, because you don't need to know all of these details, but it's a good idea just to have an overview of how it works. So, that the people you choose, it does really matter.
It does. Yeah. Start early and find the right team.
Yeah, absolutely. So those are your takeaways. Start early, find the right team. And if you have questions for us or want to reach out to us, all of our information is in the contact information below or in the description below. So you can contact Jess directly to schedule a call with him, to start working with him, and the same with me. But either way, thank you so much for watching this video. We really appreciate your time, and good luck with your home buying process in Colorado.